Welcome to Accounting Expo once again. The last time I uploaded a video on introduction to Cashbook, I said the next topic I shall be looking at, I shall be treating, shall be single column Cashbook. Now this question is concerning Sarumi Enterprises. So now, in a cash book like any ledger is divided into two sides: debit side, which is the left hand side, and credit side, which is the right hand side. The debit side has column for date, that is used to record the day the particular transaction involved took place, then followed by particulars, that is the nature of the transaction involved, then folio, that is the reference page of the page of the other account that the transaction is posted into, then the cash or bank, either cash or bank, depending on the nature of the transaction involved. Since a single column cash book, it could be cash transaction only or bank transaction only. The same thing goes for the credit side: date, particulars, folio, and cash. Now the debit side is used to record the receipts of cash, that is the inflows of cash, while the credit side is used to record the outflows, that is payments of cash. Now back to our question. Enter the following transactions in the cash account of Sarumi Enterprises. January 1, started business with 5,000 naira cash. Now, when the owner of the business starts business entity concepts comes into play. That is, ownership is separated from the business. So the owner of the business has lesser amount of money, while the business that is being started has more amount of money. So more cash is received from Mr. Sarumi for Sarumi Enterprises, and money invested in starting a business is known as capital. So it will be recorded on the debit side. So in the column for date, we shall write January 1. Then in the nature of the transaction is capital, because the money was used to start business, whereas the amount is 5,000 naira. So in the column for cash, we are going to write 5,000 naira. Then January 3, purchase goods, 3,000 naira cash. When the business organization purchase goods, they will have lesser cash because they will pay money for the goods they purchased, and as a result of that, there will be outflows of cash. And I will advise you that when you get into the examination hall, use a pencil to write plus on the debit side and use a pencil to write minus on the credit side. This does not mean that the debit side is addition or the credit side is minus in all cases. This is just telling us that this transaction always leads to addition of cash on the debit side, and it leads to subtraction of cash, payment of cash on the credit side. Once you are done with the question, just use your eraser to clean the plus and the minus. So back to the question. January 3, purchase goods for 3,000 naira cash. So in the column for date, write 1st of January. The nature of the transaction is purchases. It is worthy of note that goods, whenever goods is purchased, it should be represented by purchases. But peradventure is written that purchase fixtures and fittings for cash, it will not be written as purchases because it was fixed asset that was purchased. So it's the name of that fixed asset that will be the nature of the transaction involved. But whenever goods is purchased for resale, it will be the nature of the transaction in the particulars column will be represented with purchases. So back to the question. In the column for cash, we write 3,000 naira. Now the next question, the next transaction took place on the 4th of January. Sold goods for cash 4,000 naira. Whenever goods is being sold for cash or for cash, there is an addition, there is an inflow of cash, and as a result of that, the cash book will be debited. So the transaction will be written on the debit side of the cash book. In the column for date, we are going to write 4th of January, and whenever goods is sold, we write sales, just like we did in the case of purchases. Whenever goods is being sold, unlike a situation whereby it is said that it was fixed asset they disposed or they sold, whenever fixed asset, any fixed asset is sold, it is the name of that fixed asset that will be written in particulars column. But in this case, it was goods that was sold. So in the column for cash, we are going to write the amount, which is 4,000 naira. Now the next transaction took place on the 7th of January. Paid wages by cash 3,000 naira. Now whenever the organization pays money out, there will be an outflow of cash. So it means such transaction will be credited. So it will be written on the right hand side, which happens to be the credit side of the cash book. So the date will be 7/1. Sorry. That's January 1. So wages is the nature. The reason why the money was paid was for wages. So wages will be the nature of the transaction, and it coincidentally it happens to be 3,000 naira. Now another transaction took place on the 12th of January. Cash sales of 1,000 naira. Cash sales of 1,000 naira is a debit. It will be written on the debit side because goods were sold and cash was received, and whenever there is receipt of cash, such transaction will be recorded on the debit side of the cash book. So 12/1, sales, that's the nature of the transaction. Then 1,000 naira was the amount that was received. Now January 14, bought goods worth 5,000 naira from Bolaji and Co. Limited on credit. It's worthy of note that it is only cash transaction that are recorded in the cash book. Any transaction that involves buying goods on credit, the subsidiary book of accounts that such transaction will be recorded is the purchases journal or purchases day book. So bought goods worth 5,000 naira from Bolaji and Co. January 14, bought goods worth 5,000 naira from Bolaji and Co. Limited on credit. Like I said the other time, it's only transactions involving cash sales, transaction involving cash that is recorded in the cash book. So these bought goods worth 5,000 naira from Bolaji and Co. Limited will not be recorded in the single column cash book. Now January 15, cash purchase is 700 naira. cash purchases, there is a decrease in the amount of cash the organization has, so it will be recorded on the credit side of the cash book. Purchases 700 naira. January 16, return goods worth 1000 naira to Bolaji. Like I said initially, only cash transactions are recorded, so the goods returned to Bolaji is not cash, so it will not be recorded. January 17, paid cash of 70 naira for electricity. That's a decrease in cash, outflow of cash, so it will be recorded on the credit side. Electricity is the nature of the transaction and the amount is 70 naira. January 19, receive cash from Tudo. There is an inflow of cash, so the transaction will be recorded on the debit side. January 19, receive cash of 2,610 from Tudo. January 19. January 21, bought stationery of 110 naira for cash. That's an outflow of cash, so it will be recorded on the credit side. 21.1. The nature of the transaction is stationery. That is what the money was used for. Then 110 naira. Now the last transaction took place on the 23rd of January. Bought motor van from Tolu Enterprises on credit. That's a credit transaction, so it will not be recorded in the cash book. Now the total amount received, you could have noticed that the amount received, the total cash received, summed up to 12,610, and the total payment, the total cash paid, summed up to 6,880 naira. So if we subtract the amount received, that's 6,880 naira from 12,610, we got one. So when we subtracted 6,880 naira that was paid out from the 12,610 naira that was received, the remaining balance, the amount remaining, at a figure of 5,730 naira when we subtracted 6,808 naira that was paid from the 12,610 naira the organization received. So that would be the balance to be carried down to the next year, to the next month, sorry. So 31.1, balance carried down is 5,730 naira. So when we add the two together, it must always give us the largest amount. It will give us the amount on the, it gave us the amount, the same amount written on the debit side, that is the amount that was received. So 12,610 naira. So this balance will be taken down to the debit side on the first of the next month, the first day of the next month. So we have 1, 2, balance brought down of 5,730 naira. Now there is something I want you to take note of. All assets are debit balances. That is, the opening balance must, if it's an asset, the opening balance must always be on the debit side of any account that is being recorded. So because the opening balance is on the debit side, it means it's an asset. That is, the business still has 1,730 naira at hand. Thank you for your time and God bless you. Have a great day.